Whoa. Hey. Whoa. Hi. Welcome to the trade room, y'all. Welcome to the trade room, y'all. It's a macro Saturday. Welcome to the trade room, y'all. Hey. Hey. Welcome to the trade room, y'all. Macro Saturday. Welcome to the trade room, y'all. Happy to see you guys in here. It's the trade room, y'all. We got charts today. We go macro. We thinking big picture. Let's go now. Let's go now. Let's go now. Welcome to the trade room, y'all. This is about to be fun. Welcome to the trade room, y'all. It's a macro Saturday. It's a macro Saturday. We got things to talk about. It's a macro Saturday. Welcome to the trade room, y'all. Welcome to the trade room, y'all. It's a macro Saturday. Welcome to the trade room, y'all. Listen, like, subscribe, put your alerts on. I'm happy to see y'all here today. Welcome to the trade room, y'all. Welcome to the trade room, y'all. It's a macro Saturday. Welcome to the trade room, y'all. Hey, welcome to the trade room, y'all. Welcome to the trade room, y'all. It's a macro Saturday. Welcome to the trade room, y'all. We're gonna get started soon, guys. Love you guys for showing up. Make sure to like. Make sure to subscribe. Make sure to share with a friend. It's time to get litty. See you soon.
What's up? What's up? What's up? Welcome to the trade room. It's a macro Sunday. Guys, it's always doing a mic check. Let me know if my voice is in the building. Man, yesterday was a hot mess. Yesterday was an absolute hot mess. What happened? I was supposed to have a stream running around all day. I come on, hop on my stream yards, I hit go live, and then I just go into machine mode. And didn't dawn on to me that we were not live the whole time. So my apologies for those who showed up. It was a crazy day. I was running around, a little bit distracted, but we were doing it today. And it's gonna be a good one. It's not gonna be 2 hours like it normally is. It's going to be cut in half. So we're going to run through all the good stuff and leave the filler stuff. All right. So let's talk about what we're going through today. I'm going to go ahead and share my screen with the guest that we are having on in about an hour. That's going to be the one and only Sticks intern. All right. About an hour from now, we're getting into the fundamentals of crypto litigation for dummies. This one is going to be a good one. All right. Today, we are covering Storytime SEC versus Ripple part two. But just know, oh boy, let me see. What is this? What is this sign that's up there? Let me get that. Let me get that taken off. Bear with me here, guys. Okay, here we go. All right, so that's what's coming up next. Today, we're gonna run through what we normally run through. We're going through story time, SEC versus Ripple. Where we talked about incumbents versus disruptors last week. We're gonna hop into the charts and look at a few things. We're gonna talk about Bitcoin and the F around and find out zone and what's been happening in that zone. We're gonna look at Ethereum. Even after telling our story, we're gonna look at Ethereum, and we have some questions for Sticks Intern. We have some questions for Sticks Intern. And even with the story that we tell, is Ethereum still an indicator of alt season? The answer is yes. We are not going to look at the Clayton Orbit blockchain, look at what we talked about last week for that. We may get a chance to look at the trade rooms picks, and we may leave room for the chat to put up some requests that we can look at. Shout out to Sir Worm. Thanks for making it on the rescheduling of yesterday's stream. You know, everybody was asking if I was okay, and quite honestly, I should run through. I should run through some of these comments here, and you guys are pretty good about trying to alert me. I just wasn't alert. So we have shout out to DFK Helper. While he's distracted on stream, let's go take some of his wine. That sounds like sounds brilliant. I messaged him on Discord, no response. Listen, guys, I know you guys are trying to check on me. I was just out of the loop. All right, I was just out of the loop. But the funniest thing is that this whole covering of the SEC and what's going on, Dax was like, cross the red line. They show up real quick when you get close to their solace. Yeah, we're playing a little bit of a dangerous realm, right? Um, people were speculating that the SEC may have come after me, and in general, people were worried. But guys, I am okay. Just a little bit of a mishap plus some technicalities, but we're here. We're still covering macro, whether it's a Saturday, a Sunday, or a month, and so. Let's cover a few things before we get into the story time. First of all, shout out to the Jewelers Guild. They were on last night, discussed a lot of great things, did some summoning. I mean, it's always wonderful to catch up. And I was there last night, even though I was a little bit absent on uh, the macro podcast. So shout out to the jewelers. All right. Let's take a look at a few things before we come in. Guys, don't forget. Okay, we are still doing a giveaway. We are 27 subscribers away from doing these massive giveaways. All right, we're giving away five moksha runes to eight different winners. That is huge. All right. We have that coming up. All right. We also have another giveaway that we are doing. Did I retweet it? Yes. We are also giving away at our 200th follower. Okay. We're also giving away 1,000 DFK bloaters. We're giving away this rare archer. And I mean, this archer is a beast for boar hunts. And we're also giving away this wizard pirate that's also stoned with a vigor stone. So, guys, make sure if you have not entered into the giveaway, go ahead and enter into the giveaway. We are only 27 subscribers from that. I could see us giving that up, like doing a giveaway in a couple of weeks. All right, so we also, things are about crypto, but we made some wine. All right, we made some wine this year. All right, and the story behind this wine is that, first of all, it's a process, and the process may not even work out all the way. You may get a rotten batch, right? You may get a rotten batch, but the emphasis behind this story is that we spent 3.6 years growing a grapevine, It takes 2 years to get any grapes on it, and even if you get grapes on it, you may not get a large uh, yield. But after 3 years, we got some grapes. We then had to wait for the winter for those green grapes to then, because of the chill, turn purple and get the sweetness in it, right? You need Mother Nature to work with you over years. And then you have to then pound the grapes, extract the juice, right? Allow it to ferment for another 6 months, clean it up, put it in the bottles, and then have it sit for another 2 years. And so what we're holding right now is about, what is this, 3.7 years now? 3.7 years now it took for us to get here, and it's going to take another 2 years, even though it tastes pretty good now. Tastes pretty good now. Like a good dry wine to me, it's going to take another 2 years for this to age and taste like the sweet red dry wine that it is. So, just another lesson that correlates with investing, and it correlates with the patience that we need to get through it. All right. So again, we're going to get into story time. All right. SEC versus Ripple. And that's going to lead us right into our live that we're going to have with Sticks Intern, and our interview that we are going to do with Sticks Intern. But before we jump into story time, just to leave you with a little bit of context, from December that we spoke about. Whereas in this is the time in the cycle when people chase and hype everything new that is green. We get hit with a huge turn down and the shilling subsides. The rise of meme coins on Sol and AVAX only confirms the cycles within cycles theory and the lead up to the Bitcoin halving. There will be folks left holding the bag when these meme coins correct 99%. Okay, as macro, we have to be realistic. All right, we have to consider that this is still a really young space. And that, yeah, when things are hot, right? Everybody wants to gas things up. But even something like the meme coin, Cock, that was on the launched on the AVAX blockchain, that ran up from when it launched, ran up about 12,000%, has absolutely corrected. And how much has it corrected? It has corrected as low as 83%, 82%, currently still sits down about 75%. And so just wanted to touch base on this for just perspective for the macro before we get into story time. And we're going to look at the charts later. It's not pretty when you're the one left holding the bag, and we need to be very careful. All right. Now, I know that we are in the DeFi Kingdom space. A lot of you that follow me are in the DeFi Kingdom space. And so, we're going to touch base on the gaming aspect of things, right? Don't think that because we're going through the story time saga that we are not in the game, that we are not playing, that we are not participating. We are, all right? So far, the Mad Boar Hunt has been fun. It's been exciting. It's the first gameplay that we actually got, and as a non-gamer who is a gamer now, really enjoying it, right? Win rate is up. The amount of wins are up. I figured out a system. I'm getting loot drop. It's fun, right? We have the last season of DFK duels. And that's been fun, right? Got myself to Legendary 3, the highest that I've ever gotten. And just trying to find the best way now that I have these tools of bots. Again, shout out to DFK Helper, and then shout out to other botting systems that are there. I'm pretty happy, right? The end goal now is how do you maximize this, right? Maybe have this implemented on more accounts. And having bots is not a bad thing, it's better ease of life. And so very excited for the next boar hunts, excited to see how that pans out. And I am ready. Will the void shards be needed to go into the next boar hunts? I don't think so. But there is BYOB for these next boar hunts. And so, again, before we dive into story time, just a little bit of what's happening in the space. Very excited for the next boar hunts. We're not so far away from that. Will void shards be needed? We don't think so, but we have BYOB, right? Bring your own potions, or BYOP, sorry. Bring your own potions. And so, what have we been doing? Well, we've been using one of our botted accounts to accumulate mana potions, right? And so we are looking to be able to enter into the boar hunts and the cost of entry be almost zero. And then that's where profitability lies, is how can you assign your different accounts to do different jobs so that different aspects of the game are what are cheaper for you to enter, and then loot becomes that much better. And so, don't want to veer away from the gaming side of things while we do this coverage. But without further ado, let's get into this coverage of Storytime Ripple versus SEC Part 2. Remember, we're going to be having Sticks Intern on with us soon to cover in more details just the overall fundamentals of crypto litigation. But before then, I am going to be covering our side of things and the story behind the Ripple versus SEC. And all in all, this is going to relate to the DeFi Kingdoms ecosystem. We might not see it now, but it is certainly going to relate to the DeFi Kingdoms ecosystem. So let's spend this next 20 minutes jumping into the story time. And then for sure, we will jump into the charts just to see where we are because prices and the market is coming down. Now, last week we discussed incumbents versus disruptors. Hope I was able to give some clarity on incumbents versus disruptors, but that's important conversation to have before we then get into the story, or before we then get further into this story. So where are we now that we've moved on from incumbent versus disruptors? I want to paint a picture for you because we're in 2024 now, but where was this space in when Ethereum first launched? Where was this space in when it was the first 3 years, when it was the first 5 years, right? Where was this space, and why is the history of this space important to what is going on? We are painting a picture here. So let me go ahead and pull up this graphic that I have here, but I should also have another graphic. Just bear with me while I pull that up. So what you're looking at here is coin market cap, and you're actually able to do snapshots. You're able to do snapshots of where the crypto space was at in relation to market cap and date. Okay. This is going to be very important to the storytelling that we're doing here. All right. Before we do that, let's look a little bit at um, the launch of different tokens in this space. This is going to make more sense in a bit when it comes to this story. You have Bitcoin launched in 2009, Litecoin, which was a fork of Bitcoin, launched in 2011, and then you had XRP as really one of those first tokens or first blockchains to launch in 2012. We did not have Ethereum launch until 2015. even something like AVAX, right? That's, high market cap making big moves. AVAX did not launch until 2020. So, what is the importance of when these blockchains launch? Well, when you're a blockchain and when you launch, you may not have a lot of liquidity, right? We have 20,000 blockchains now. However, some blockchains have died from launch. It's not like every single blockchain that launches, every single network that launches survives. Sometimes your network doesn't survive. And so, in those early stages, when you launch, you are doing everything you possibly can to survive. It's all about survival, right? When you look at the DeFi Kingdoms ecosystem, when it first launched, with those high APRs, if we didn't pop off and if there wasn't a lot of FOMO that came in, a lot of liquidity that came in, the DeFi Kingdoms ecosystem could have died. Guess what? The DeFi Kingdoms ecosystem can still die after its first years if it is not doing what it needs to get new user base and to grow the community and to make these partnerships, the DeFi Kingdoms ecosystems can very well die. Right. So shout out to Sergeant Filthy McNasty. Thanks for making it in today. We're doing story time. All right. We're doing story time part two. We talked about incumbents and disruptors, and now we're getting into the importance of understanding where the crypto space was in those early days when these tokens launched. Okay. So Ethereum launched in 2015. What you have to keep in mind is that when you first launch, it is very, very tough to make it. And you have to try to do what you can to make it through. And how did these blockchains launch? Well, a lot of these blockchains launch with ICOs, initial coin offerings. Okay. What are ICOs? Well, let's go to Investopedia. And remember, I'm painting a picture for you here. We are telling a story here. We are going to a place with this. All right. When Ethereum launched in 2015, it launched with an ICO, an initial coin offering. An initial coin offering is the crypto initial coin offering is the cryptocurrency industry's equivalent of an initial public offering that tends to happen in the stock market. Okay, a company seeking to raise money to create a new coin, app, or service can launch an ICO as a way to raise funds. Okay, now any blockchain network that launched an ICO was a security. Okay, an IPO happens in the stock market and it is security launches. An ICO in crypto is the exact same thing where you are launching a network and you are selling securities. Okay. You are selling literally securities. How was the XRPL launched? The XRPL was not launched on an ICO. Okay. The XRPL was not launched on an ICO. Even Bitcoin, even Bitcoin, when it first launched, was a security because Satoshi Nakamoto bought the first 50, what was it? Bought the first uh 50 Bitcoin or something like that. So when Satoshi Nakamoto first bought those 50 Bitcoins, it was a security. It took a little bit of time for it to get decentralized. XRP was not launched with an ICO. XRP was given to Ripple Labs. Okay, was given to Ripple Labs. Now, were they given a large percentage of it? Yes, I believe they were given like 70, 80% of it. Now, to this day, Ripple actually holds less than 50% of it. So the decentralization that's happening with the XRP ledger, it's happening. But it's a little bit different from how these other platforms and network went through their decentralization phase. They literally launched ICOs, which are securities. Understand this. And Ethereum was launched 3 years after XRP was launched. And so you have to ask yourself, why? Why did the SEC come after Ripple Labs? Why did the SEC not go after Ethereum? Actually, let's go even further. Why did the SEC, 3 years after the Ethereum blockchain launch, why did William Himon, director of division and corporate finance, why did he in 2018, 3 years after the Ethereum blockchain launch, come out of his asshole and say, in these cases, calling it a transaction, an initial coin offering, or ICO, or a sale of a token, will not take it out of the purview of the US securities law. Okay, so if you sold an ICO, it will not take it out of the securities law. So you're literally saying an ICO, if you launch an ICO, it was a security. So then why would you come out of nowhere and say, putting Ethereum aside, we believe it is now fully decentralized? Where does that come from? Right? And what are those parameters that you're putting around of it? Is the token creation commensurate with meeting the needs of users rather than feeding speculation? All these markers, and we'll talk with Sticks intern a little bit broad about the comments from the SEC. But why then put the ICO, put the security sale aside, and then say that Ethereum is now decentralized? I don't get it. I really don't get it, right? And so it looks fishy, it looks shady that an ICO launches Ethereum. You come out 3 years later and say that, well, putting a security sale aside, it is decentralized. But then in 2020, you sue the blockchain or the company that's using the blockchain to say that, hey, you guys didn't do an ICO, but guess what? You are selling securities. And the context that I want to give you guys is, why is there some sort of alignment with the Ethereum Foundation? As Bill Himon was preparing this speech, there were 160 plus renditions of this speech where William Himon was sending these emails back and forth, back and forth, back and forth with SEC individuals, and they helped him put it together. It started off as a decentralization set of emails that were being sent around, and then William Himon himself changed the speech to the ether speech. Why would you do that? Why would you circulate this thing across the SEC, it be under a different title, and then label it as the Ethereum speech? Well, who helped them write the speech? Who helped them come up with these concepts? It was law firms, all right, Andreessen Horowitz, that helped him conceptualize this whole decentralization concept. Before this speech, before these law firms got together, okay, the whole decentralization thing did not exist. It was constructed by law firms and people that had an interest with getting Ethereum a free pass, even though it launched an ICO. And so you have to ask yourself, why was the people who developed or ran the Ethereum Foundation, Joseph Lubin, why did they have such an interest in working with the SEC to come up with this decentralization concept? And why would this person from the SEC go out of his way to drop this 3 years after a blockchain network launched an ICO? And we'll talk about that to come. But what we're doing today is giving historical context. In 2015, when Ethereum launched, what did the market look like? Well, let me tell you. Bitcoin has always been the boss. Bitcoin has always been on top. In 2015, Bitcoin had a $3 billion market cap. Okay, a $3 billion market cap at the price of $243 for Bitcoin. XRP was number two. It had a $300 million market cap. The price sat at a penny. Okay, the circulating supply was 31 billion. Even for Bitcoin, the circulating supply was 14 million. Because remember, um, Bitcoin itself was still going through the Bitcoin hash rate and the mining mechanism to launch new Bitcoin. All right. Remember, Bitcoin still has about, I don't know, 100 and something years to go before they're all mined. We have a Bitcoin halving coming up. And at the state, I believe there had only been one halving. All right. So you have, these are the leaders. These are the top 10. Litecoin, which still lives today. Dogecoin was number 4 with a $20 million market cap. that's that's interesting. You have Stellar. Don't know what the hell BitShares is. It didn't exist. Dash just kind of died away, right? So you have these top tens, and really, it has only been Bitcoin and XRP that have stayed in the top 10 since the early days of 2015, which at that moment was about 4 years, 5 years that the cryptocurrency space had lived. This is context. This is historical context. Pay attention, right? And so, where was Ethereum, right? Where was Ethereum when all this was going on? XRP had strength in this space, Bitcoin has strength in this space, XLM has strength in the space. Well, you have things like Monero, the privacy coins. You have all of these coins that we don't even see them today. So I'm not saying that, hey, when networks come out, that, hey, if you're strong, you're not going to grow. Of course, if you're strong, you are going to go. But where is Ethereum? Ethereum, when it first launched, was number 38 with a market cap under $1 million at 85 cents with supply at 1 million Ethereum. The supply conversation is important. In general, blockchain tokens are going to have some sort of inflationary mechanism with them. It happens. But when Ethereum first launched, the market cap was under 1 million, and there were only a million tokens available. Why is this important? This is important because how did Ethereum get to where it was going? Not only was Ethereum an ICO when it launched, an initial coin offering when it launched, which was illegal at that time, which means that the launching of Ethereum, they launched securities. It's not even like a question. This was an illegal launch and it was a security. So you have to ask yourself, who purchased this 1 million Ethereum available at the time, right? And how did Ethereum get where it was going from number 38 to number 2, right? Yes, the technology has something to do with it, but when you first launch and you are a first launching blockchain, you can die very quickly. As you've seen, some of these other things here die. And so you have to try to get ahead wherever you can. And what we have seen from the people, Vitalik Buterin, Ethereum Joseph, the law firms that represented the Ethereum Foundation, those like Andreessen Horowitz and some of these other law firms had to push and had to fight. And so, guess what? When these law firms have an opportunity to talk to the SEC, they start spewing this whole decentralization concept that did not live before 2015. And so when we ask the question, why did Bill Hinman make this speech? Well, Bill Hinman had some sort of interest. Bill Hinman was still getting paid by his law firm, $15 million, was still getting paid by a law firm that had an interest in the success of Bitcoin and more so specifically Ethereum. Now, again, why would you go sue Ripple Labs when they did not have an ICO? When you have other things that launched later that had an ICO. And if you are Joseph Lubin and you just launched your network blockchain Ethereum and your market cap is below a million, and I'll show that again, Ethereum could have died and they needed to do everything they can, and their market cap was below a million. How far are you willing to go? How far are you willing to go? And this footage that I'm playing right here is while they were launching, okay, and they had their meetings with their private investors, and these private rich investors who are looking to drop billions at a time, who are looking to be whales, who are looking to eat up this 1 million Ethereum that was available, right? And again, it inflated, right? So after 1 year, uh, there was more Ethereum. But when you're trying to scoop up what's on the market and it's 85 cents and you want to be a whale, but you don't want to be known. Let's say you want to buy 60% of the supply, but you don't want it to be known that you hold 60% of the supply. Obviously, it's just wallets. But what is the advice that Ethereum, that Joseph Lubin gives to people who are asking, how do I get around this? First of all, we're selling securities, it's illegal. How do you get around this, right? Okay. Let's listen to the question that was asked and let's listen to Joseph Lubin's response.
Be a limit on the amount that a person could invest in Ethereum?
A person can buy from any number of different identities. We may limit the size, the unit size of a sale, just to make it easier to disguise. Let's say if you're a whale and you want some privacy, you can buy 50,000 units and so nobody scares people with an enormous initial purchase. Um, so if you are a whale, if you are planning on investing several million US dollars worth, then you can do that in for multiple identities.
Hold on. Did y'all just hear that? This is Joseph Lubin, who runs Consensus, part of the Ethereum Foundation, buddy with Vitalik Buterin, is saying that if you want to be a whale and you want to hide your identity, literally verbatim, if you want to put a couple billion into Ethereum, you can buy 50,000 units at a time. You can disguise your identity if you want to put a couple billion in. With a couple billion, okay, with a couple billion, when the supply at that current moment in time was only 1 million, you can buy in pieces of 50,000 units at a time. I mean, in that state, I could buy 70% of the supply, 50,000 units at a time, be a whale, and nobody will know that I purchased unregistered securities. And I can do this over and over and over and over again because that's the advice that I've gotten from Joseph Lubin of Consensus. So, how does Ethereum rise from obscurity and 38 in the entire cryptocurrency industry when you have Bitcoin that has strength, XRP that has strength, all these other things that have strength here. Well, I think the Ethereum technology is pretty cool. I do think it's pretty cool, right? They were able to do things and launch things and get developers to flock, all right? Get developers to flock over. And so, yes, after a period of time where people, 3 years of development, all the lawyers are like, yeah, in closed door meetings, yeah, we're talking to the SEC. Yeah, we're coming up with this decentralized kind of aspect of us, right? You go into 2018, right? This is when the Hinman speech launched, June of 2018, right? You go into the 2018 meeting, and Ethereum has now been able to make its way to a $31 billion market cap. And it's actually very, very close to Bitcoin, right? With XRP below it at a $10 billion market cap, right? And it's a 3-to-1 ratio at the time. It is a 3-to-1 ratio at the time. Guess what's happened to the Ethereum circulating supply? It's multiplied by 92%. We went from 1 million, right? We went from 1 million to 92 million supply, Ethereum supply. All right. So you guys talk about inflation in the DeFi Kingdom's ecosystem. Oh, well, this is some inflation right here in Ethereum supply, right? And so if I'm a whale, right now it's $340. But if I'm a whale and I was advised to disguise my identity, right? And in 2015, there was only 1 million supply. I can go in 2016 and buy more as the supply is going up. I can continue to do that. And then when you hit these bull markets after the Bitcoin halving, when the entire market after 2018 believes that Ethereum has some make believe clarity from Bill Hinman in a random speech from emails that he circulated around the entire SEC and turned it from a regular speech to the Ethereum speech, we then get to a full blown bull market. Okay. At the top of in February 2021, and that ratio has changed drastically. That ratio from a 3-to-1 ratio has gone from, let's do some quick math here. Let's round it up to 33, 6, 9, 12, 15, 18, has gone to a 6-to-1 ratio. A 6-to-1 ratio. Two reasons. One, some perceived clarity from the SEC. Two, the adoption of the technology because developers are willing to go there. Hedge funds, not hedge funds, venture capitalists are willing to raise funds. And then also, now that you launched this ICO with Ethereum, now you, what Joseph Lubin called the token factory, now you launch 10,000 other tokens that are ICOs that because you have this decentralized concept, now you're able to launch a ton of other ICOs under the Ethereum umbrella, which then draws up the Ethereum market cap. And so it is important to understand the historical concept or the historical meaning of these snapshots because yes, the technology is great. Yeah. Smart contracts, the Ethereum virtual machine, but that's because you were able to onboard a ton of people who, without actual legal cases and legality, were able to have this psychological concept that that Ethereum had a regulatory clarity, a regulatory pass. And so you got to ask yourself again, why does William Hinman come up out of nowhere and drop this speech singling out Ethereum rather than saying, hey, at the SEC, we're seeing this new concept of decentralization. And if you are a blockchain network, we are going to draft parameters that you need to fall around in order to be cleared. Even if you had an ICO, even if you had this, even if you had that, these are the circumstances that you need to fall around. I'm not singling out Ethereum because I don't like the technology. I like the technology and it's cool, but you have to ask yourself, why, with a blockchain that has more years, more longevity, has never been hacked, all right, why come after them? Try to get XRP labeled as a security when we didn't have an ICO. We have more years in this space. We have a large market cap. You have to understand that there was some sort of collusion with the law firms that had interest in Ethereum, the SEC, and we see it more in the emails. Okay. And so next week, we're going to talk in more details about these emails, what these emails tell us. Okay. Let me exit out here. What these emails tell us and why the SEC just looks so horribly bad now that they've sued Ripple and we have been able to get certain information out of these. And so that's the picture, okay, that I'm painting for you guys. All right. How does Ethereum rise? Why does the SEC come out of nowhere trying to give Ethereum this fake clarity? And the message that was dropped by the leaders of the Ethereum Foundation as to how individuals can go and disguise their whales and buy up a couple billion over a period of time when the supply of Ethereum is only 1 million at the time. Holy schmoly. Man, it could be some whales out here that got like 70% of the supply for all we know. And they were able to do that over a period of time and buy it up slowly because they did have fear that they were buying unregistered securities. And clearly they were. And so the question we're going to have for Sticks Intern, okay, is what are the statutes of limitations when it comes to some of these ICOs? All right. And what we're looking at moving forward with some of these litigation cases. But all in all, is Ethereum still an indicator of all season? Yes. Okay, it's already implemented its place in the space. It's already got a lot of developers to come through. They did go ahead and launch those smart contracts, which, by the way, Vitalik Buterin spent some time sitting on the couch of some XRPL developers, and they were already talking about smart contracts. They're already talking about some of these things, but the developers in the XRP ledger decided to let's just show, like Amazon. Let's just show that the XRP ledger works. Let's pick one thing, let's kill it, and then let's go from there. Meanwhile, Vitalik Buterin was like, nah, I'm willing to be more of a game changer. I see this thing that you guys are working on, smart contracts. It was Codius. It was called Codius on the XRP ledger side, and it just never was developed. He launched the smart contracts. He got some fake regulatory clarity, and then boom, a lot of development happening on the Ethereum blockchain, but also too a lot of fraud, a lot of ICOs that were launched that literally went to zero, but put a lot of money in venture capitalist pockets. And so, listen, I'm gonna let you guys hear it one more time, and then I'm gonna move on. This is Joseph Lubin of the Ethereum Foundation of Consensus with whales, billionaires asking, how do we get in and how do we hide ourselves?
Limit on the amount that a person could invest in Ethereum.
A person can buy from any number of different identities. We may limit the unit size of a sale, just to make it easier to disguise. Let's say if you're a whale and you want some privacy, you can buy 50,000 units and so nobody scares people with an enormous initial purchase. So if you are a whale, if you are planning on investing several million US dollars worth, then you can do that in for multiple identities. We will ask for a real world identity in the form of email address, just so that we can make sure that everything works smoothly all the way through the process. But we won't be requiring it. So we can create.
No AML, no KYC. If you got a couple billion, you want to hide your identity. We're the guys. Listen, I'm a hustler. I'm a hustler too. I love hustlers. Get it how you got to get it. But let's not lie about a part of how Ethereum got to where it is. Nobody wants to talk about this. I have no beef with the Ethereum technology. My beef is that no one wants to acknowledge that this is a part of what happened. And when we can acknowledge that this is a part of what happened, I'm gonna feel better. So shout out to Skiller. All right. Shout out to Sir Worm. He says my conspiracy theory senses are tingling. They're tingling. They're ready to blow up. Right. So that is part 2 of story time. The historical context. All right. We just told a little bit of Ethereum story. Okay. We're gonna talk about the actual court case. What happened? What we found out in court, and how the SEC ended up losing. And the SEC does not lose often, right? How did the SEC ended up losing? But I wanted to give you guys some historical context, so that we can move on from there. So, we have about 9 minutes before we get into the live that we're coming into next, the real big part of today. And just to promote that again, we're going to have Sticks Intern on around 3 p.m. Okay, talking fundamentals of crypto litigation for dummies. I'm the one coming here telling my conspiracy stories, right? But we're gonna talk to Sticks Intern and just find out, hey, what are the basics, right? What do we need to know about what's happening in the space? I'm not gonna bombard him with a bunch of conspiracy stories, even though we got the court documents to prove it. They're not conspiracies anymore. All right, if you have common sense, you probably would be able to piece together a few things, right? So looking at the charts, we don't have a lot of time to spend on the charts, but all in all, the F around and find out zone is something that we've spoken about for a very long time. Okay, and in this F around and find out zone, we said that this zone is a very convoluted area. You can see all the convolution here, and that is between what? That is between 37,000 and 46,000. All right. We tracked our 147-day, 57% run. And officially, I'm going to retire that, right? I'm going to retire that because we did it. All right. We did it. I feel like Kamala Harris. But all we've been saying is, yes, this is awesome. The Bitcoin the Bitcoin ETF was awesome. Buy the rumor, sell the news. Retail investors got shitted on. And so we've had a huge correction. This F run and find out zone, if we escape this F run and find out zone, bull market confirmed. We are in a space where we're waiting. Uh-oh, what just happened? That was weird. Let's wait for that to refresh. That was pretty weird. Let's see if my chart comes back up. Okay, so we're in a place where we're waiting for this mid Bollinger to catch up to this F around and find out zone, and for price to meet it there, because we've seen in the past that on the weekly chart, right, this mid Bollinger is a place that can bounce off and launch us. So still some cooling off that needs to be done. We would love to see this range happen between 39 and 42, this interior green area. But we won't be too upset if it breaks it and it comes down to retest this $37,000 area. I think that'd be a good time for that mid Bollinger to catch up. And then all we want to do is find our way up out of this range and then turn this into support. If we can turn that into support, we have Bitcoin at $52,000 as the next step, and then a retest near the all-time high range of 65,000. We could also get a bounce at this channel here, right? We've been following this channel for a long time here. we could get a bounce there at that channel, and that channel is at $39,000. All in all, when we look at the monthly for Bitcoin, we are still very, very bullish. Why? Because in a larger time frame on the monthly, which with every candle being 1 month, we have this mid Bollinger here, right, curving, right? We've been on a downtrend this entire time. Now we have this mid Bollinger curving with bullish price action in this F around and find out zone, and we're going to allow this consolidation to wrap its way through in this F around and find out zone. And so what does that say for the overall space in general? Its overall space in general says that that cooling off is due to happen everywhere else in the space. We have AVAX, all right, looking like it wants to cool off to as low as $28. We can get a bounce from there. Where did we say our bull market confirmation for AVAX was at? Our bull market confirmation for AVAX is at $21. We got a strong bounce from there, right, from our bull market confirmation area, and we went up about 161% from that area. I don't want to see it back at $21, but if it did that, I would not break a sweat. I would not break a sweat. All right. But I do expect it could possibly hold, right? We have this low of $31 here. It could possibly hold that, come back into this next Fibonacci area. And really for AVAX, like the F around and find out zone for AVAX is literally in this area between $34 and $48. But AVAX looks good. AVAX looks really healthy. But overall, we're doing what? We're going through a cool off phase. Even Ethereum, which we'll look at Ethereum closer on the next stream, also looks pretty healthy. I have the historical context that I'm giving you guys, but it doesn't mean that I don't see what I see on a chart, which is Ethereum being really bullish and really healthy. And then for Jewel, right? For Jewel, we've been tracking this inverse head and shoulders. Very powerful move, went up 700% from there. We're tracking this cup and handle here. And just like with everything else on the weekly, we see this mid Bollinger catching up here. Now it did break below this 25-cent area. We had this market here at 22 cents, which aligns with the baseline here. But overall, we have this 15-cent area that we were tracking from what? From this inverse head and shoulders area that we said is the ultimate support. Would I like to see Jewel go that low? No. But am I sweating if it does? I am not. Why? Why am I not sweating if it goes as far as that area? Well, when you look at the overall history of Jewel, right, all the way back to the beginning stages of Jewel. Oh, I did not mean to do that. Let's go back. All the way back in 2021, this was the first support area. The first support area in DFK history where we got a correction after a big run. And so as long as Jewel does what? As long as we don't get this low over here, okay, of 11 cents, that was the low that we created, since the previous low, and it finds a way to either find some support, break back, and try to find 22 cents or 25 cents as support, or back test this for a final strong support. And what coincides with that and gives us confidence is that since we've been tracking this inverse head and shoulders and this bullish divergence when there wasn't confidence in the market, since we've been tracking that on the 3-day chart, we have an opportunity, now that the RSI has cooled off, to continue this trend that we have here. And we are still super bullish on Jewel to see it back at that 75-cent area to test it. 94 cents, $1.30, and then $2.18. And then from there, we can talk about where the possible rest of the upside is. But we're looking for this to play out here. We don't have time to look at some of these other charts. Like I said, we have Sticks Intern coming on, so we're going to back up out of this. I think we even have Sticks Intern in the chat saying what? I wish I were listening to this. I'm almost back to my apartment. I'll be there soon. Trade. Yes, Sticks. No worries. I'm gonna give you some time, and we're gonna start. We're gonna start while we wait for Sticks intern, and we may even have more time to look at the charts. So Skiller, the rest of you guys, we're gonna see you on there. Again, this was story time. It was important, right? It's important. I'm gonna be talking about XRP more in this stream, but it's important to give you guys some context as to what happened, where we're going, and this was part two. And so, guys, we're gonna start the other stream. I'll see you guys there soon, and we'll do some charts while we wait for Sticks intern. Thank you guys for coming to the redo of the Macro Saturday. Peace, and we will see you on the other